Hello and welcome, friends, fellow traders, and investors. My name is Lloyd Logan Boucher from On Point Stocks and Options Trading. You can all call me Logan. And this is your midweek market update video. Wow, pretty interesting week. Hope everybody's been having a good week so far. We've had some pretty interesting movement in the market and just an enormous amount of news coming out with talk about more stimulus, presidential debates coming up actually just in a couple hours, and some pretty significant economic news coming out this week. So let's get started as we start analyzing the indexes and the sectors of the markets. Then we'll go into the trade favorite chart setups that we were looking at from last week and reviewing over those. And we'll set up some new favorite chart picks for the week ahead. So let's get started. Okay, so taking a look at the indexes, we're going to begin talking about the SPX. Now, the SPX broke its uptrend and began a technical downtrend, but then just had this crazy strong move on Friday and gapped up over the weekend to have a nice kind of bullish candle, but then we had a bearish engulfing, almost bearish engulfing, not quite a bearish engulfing candle. And so we're right now sitting below that 50 moving average and the 21 moving average, and the 50 is back above. So where we're sitting right now with the way these candles are positioned, a gap up, this could technically gap down tomorrow and end up an island reversal. And if that's the case, well, the market's going to be in some trouble. It looks like it's going to have a serious push down. But the way it's positioned, it literally anything could happen. And because there's such significant news coming out tomorrow, I would be kind of concerned as to what I would be doing as to making a call up or down on this market. And just be aware of that. And that's kind of going to be my mantra here through the day till we get to our final chart picks of the at the end of the video. Really, we're in a position where anything could happen. It could gap down, retest this moving average. Well, let's just walk through the process here. The things that could happen on this different chart, and we'll go through this quick because we got 4 of these that we got to go through. We could have a gap down tomorrow, retest the trend line, push up, come back, and then push higher, and that would set up a new trend. Or retest the trend line fails, and it ends up breaking lower. Or heck, from tomorrow, it could just continue going up. Whether or not we stay sideways, I don't think we will. And just because there's such significant news coming out with the debate tonight, with the GDP numbers tomorrow, there's going to be some movement in price. What direction? We don't know yet. That's what we're going to find out when we hear this, the debate results and such. The Nasdaq's pretty much in the same place. The only difference is it's above the 20 and it's above the 50. Now you could say the 20 is active by the look of this candle. When it came down, hit that 21 moving average, it bounced off pretty sharply. And so you could technically say that that's an active moving average right now. The algos are on. It did have quite a bit of a sell-off at the end of the day though today. So let's see what happens with the Nasdaq. There's nothing new to say. We still have the same overhead resistance here, which has not been met yet. And then we have this one here, which has kind of been used up. So nothing more there. We do have that consolidation down below, and a retest and consolidation probably serve as a bouncing opportunity. But right now, it's anybody's game. Looking at the Dow, again, it looks much the same. We broke the technical uptrend. We went into a downtrend. Could this have been just a 1-2 leg retracement before the next move up? Again, we're above that trend line, so anything can happen from here. Be aware, we're in indecision territory right now. Now, the Russell does look different. Now, the Russell is actually holding below that 21 moving average. It is in a technical 2-leg downtrend with a corrective move, 50% of the range. And it's kind of looking like it, although we've had some serious bullish candles, we had some buying at the end of the day, it looks like everything is holding to the downside. Once again, just going to give you full on disclosure here. We don't know what's going to happen next. On a candle like this, there's very low, especially because you got to look at all the indexes. It's very low kind of predictability into what's going to happen on a day like after today with the news coming up. Okay. All right. So let's go quickly into our past favorite chart picks that we were looking at over the last week. All right, so before we get into these, I want to be really clear. This is all for educational purposes. These are not suggestions or recommendations, and past results don't equal future performance. I put this stuff out there to kind of get you into my head, let you know how I think in terms of identifying charts and price movement, and then we kind of go from there. So what we're looking at right here, this is the wrong one. Should be looking at T4 right there. All right, so here we're looking at CVX. CVX, we had a identified a action box right here on the chart. We had this gap up into that action box, which never really gave an opportunity for a short setup. This is a short setup because CVX has been in this really nice downtrend. It broke through some key resistance, was looking at that resistance holding, thought it might get a little higher, didn't get higher, and it actually did sell off quite nicely here out of this box. So that's actually a pretty decent move. I think I'm in this and I pulled off half today on the position and it was up 14% in the option. So that was a pretty decent move on CVX in terms of the options return. And of course, CPRT. The plan on CPRT was waiting for it to come back into this action box, retest this either lower trend line or the upper trend line and push higher. It traded right through the action box, didn't give a buy signal. It did actually give a buy signal here on this candle and then again on this day. And now it's had a nice gap up and it's doing basically the exact same thing as the market, except it's technically in a stronger position than the market. So if the market decides to go up tomorrow, I would expect this will continue. And it could end up being a pretty darn nice trade because it just broke out of that long-term consolidation right there. So that's a pretty significant one. CPRT is doing exactly what it should be doing. Very happy about that. SE right now. SE, I was in. This one did stop me out. And then it turned around and gave another buy signal. Oops. Let's grab this proper pan button here. So SE, there was a very nice trend right here, which it was holding quite nicely. It did break a little bit lower. It got a little loose on us. Didn't give or did give a buy signal on this day, and then it gave a buy signal on this day. And then, of course, it traded a bit higher. Today, it did pull back a little, but there's nothing wrong with this chart. It's still intact. That breakout was what we would want to see, what a trader wants to see, and then it turns around and pulls back. And so you could still look for something like, whoops, that's not what I'm looking for. Could still look for something like this off SE. So that's still in play as well as Run. And Run seems to be running quite well. Run did come back into this buy box. It actually gave a really nice test at 21 moving average and that held above the resistance point, which is now support. And it worked out perfectly. And it's up quite a lot, I think, here. If looking at Run here on a from an entry standpoint, yeah, it's about 22% up on that chart. And in an option, of course, that would be a much higher amount. So Run's in a very, very good position. There's nothing to say about Run other than the fact that this candle, is showing like it might give a bit of a pullback tomorrow. So Run's looking really good. That's definitely the winner for the day. Okay, and that was what day is today? Tuesday. So that was last Tuesday's. I usually go back to two videos. So that was last Tuesday's, and then this is the weekends. This would have been on last Sunday's video. So last Sunday's video, oh, that was CVX. That's right. We had the first pick on CVX. That was Tuesday's, which never got met, and then the pick got met. We put it back on again for last Tuesday, and it did get met, and the entry was met on that day there. It did trade into the action box. The other short rate here, Cisco, it traded really nicely into it. And whether you're an aggressive trader trading it as it's still going up or waiting for the confirmation, it gave an entry as well as today. But nothing much has happened since then. It's just holding. It's still in that downtrend. It's retesting resistance. It's up into the moving averages. That 8 looks like it's giving a little difficulty on the downside, but everything still looks intact. This is a technically weak chart relative to the indexes. So be aware that even though the indexes go up, this is probably going to push up, but the amount of risk will be less to take a stop out on this versus what would happen with the index itself, which is relatively stronger. If the index decides to go down, this will probably fall right out the window. So this will probably give a nice move relative to the index as well. TPTX did not meet the action box here. It actually, when we looked at it, it closed at the all-time high, and I expected it would probably gap up. But I was also hoping that there would be some form of a pullback that would take it back in here. We haven't had that yet. Maybe give it a few more days. Maybe it comes and happens. But as it goes, this is still in a very nice strong uptrend. It's bucking the trend. It's not correlating to the indexes and pulling back when they pull back as much or nearly as much as they are. So this is a relatively stronger stock. And so everything's still in play. It looks good. TFFP actually just met entry today. Now, the aggressive trader had an opportunity here to enter this trade on this wick at the test of the 8 moving average. And I'm going to start pointing this out because as this market is right now in an area where it's really, really overextended, we got elections coming up, we got all these major news events that are happening, it's going to start whipsawing back and forth in wider ranges, which means confirmation entries may become a little bit more less reliable with a lot more risk because of the volatility. And so in situations like that, what a lot of traders will do is they will take the aggressive entry on the retest of the moving average or the retest of the trend line or the resistance or support line with maybe a half a position and then add to the position as it shows confirmation and that candle turns white and then they can add to it. And what it does is it gives them a lower average price in the entire trade. So that's always a choice, and you can look to doing that if for trading people who are working on strategizing how to better enter with better prices. The risk is because without the confirmation that this candle just turns around and ends up doing this and falling right out the bottom. Well, if that's the case and the entry was down here and the stop loss is right there, well, you got in with very little risk when half the position size. It's not a big deal. And if the next day the candle turns around and decides it wants to start going back up and it gets back in the action box, well, you can re-enter the trade knowing that you've only risked half the money in the first time you got it in there. So it just, it's a different way of trading, obviously, a little bit more aggressive method, but it can prove in this type of a market environment where we're going to expect wide swings more effective. Keep that in mind. Okay, so before we go any further, I would like to ask you if you haven't yet and you like the videos, click the like button. And also, if you don't mind, hit that subscribe button along with the bell next to it. And you can even hit the share button if you want to share this with other people, maybe on your Twitter feed or on your Instagram or your Facebook. That would be appreciated. I am trying to grow the channel. It's a slow grind and it takes a lot of hours each week to put these videos out. So any help I can get from you guys is greatly appreciated. I really do appreciate your support. Thanks so much for that. All right, here we go. Tomorrow is a big, big, big day. Okay, so we got the presidential election debate coming out, a couple hours. That's going to be huge. This is when they're going to lay it on the table and people are going to realize, hey, is Biden, competent? Is he, because they never show anything but little clips of him. When he comes under attack, I'm concerned, right? You know that Trump can be relentless in his attack. Will, Biden be able to hold up to it? He's pretty old. He looks a bit frail, and he's talking about raising taxes. I'm not going to be political here, but if they raise taxes, that's not going to be good for the market. Of course, former years of Trump, I don't know if that's good for the market. So it's all 50% of one and half of the other. So um, the debate's gonna say something tonight. It's gonna swing people's opinions based on what is said. Is it too aggressive? Is it too passive? Is it competent answering, competent questioning? I'm already starting to read the crap that's coming out about earpieces and this and that, and it's like, oh my God, it's just a joke. So it should be entertaining. If you're a futures trader, be aware futures markets will swing hard, hard, hard on this debate going on. And if you were in the futures markets last time there was a presidential election, I watched this futures, the S&P. I was in the trade as it swung a full in the post market up till 2 a.m. It swung a full market limit down and then back up again like overnight. Unbelievable. So be aware it can create massive volatility. And I should have lightened my positions up. I was actually hanging out with my kid, one of my kids, so I kind of completely missed it. But holding on to positions into this kind of an event is probably not the smartest idea, but we'll see what happens. Also, what's happening tomorrow? We got GDP. Q2 GDP, 31% expected drawdown. Unbelievable. These are record numbers. That's crazy. Not record. Last month was record. And then in Canada, they're expecting a growth of GDP at 3%. Fantastic. So good for Canada. Rah, rah. Keep an eye on your Canadian and US currency exchange, Forex pair. All right, so those are big news that's going to be coming out. Be aware of that. Pending home sales, obviously, oil inventory numbers. And then, of course, on Thursday, continuing jobless claims. We're going to be taking a look at the jobs numbers and seeing how that pans out. They have not been good, and last week they ticked higher. And so it's kind of a little bit of a mess as to what's going on with the economy. Nobody really knows for sure. Are there going to be more shutdowns? Are they going to lay off from the shutdowns? It's a big swing back and forth. Friday unemployment rate comes out, so be aware. Another big number. This is a big week for news, and then to have a presidential election coming up at the same time, so that's going to have some effects. All right, let's get into the sectors real quick. All right, so looking at the XLE, XLY, we're looking at the sector, discretionary sector. Much of the same. We had to pop up. We got back above that trend line, but we're still holding. We don't have any confirmation. Once again, a lot of these sectors are in that like kind of indecision spot. They're going to go higher, they're going to go lower. This candle today really messed things up. If this had continued higher today, if we'd broken to a new high and it continued with some substantial move, I would have been long everything, shut down the shorts and get long. But that candle didn't tell us anything. And that's indicative of what you're going to see when there's a big news event coming out post market. And that's what we got coming out in a couple hours here. XLK, tech sector, obviously same thing as the NASDAQ, just basically no decision as to what direction it's going to go. Financial sector still looking weak, and it's continuing to look weak. That gap up and that rally up was followed by selling. So financial sector still looking weak. And you probably heard that JP Morgan, what a great bank, that bank. They're such nice people. They just got fined $1 billion for spoofing in the metals markets and futures markets. 1 billion 990 something or 900 something $1 million. 1 billion with a B. That's incredible, and it's about damn time that the governments are actually starting to punish these people. Well deserved. Problem is, they've been doing it for like 8, 10 years. They've been working this gig, spoofing the markets and stealing people's money. Why is nobody going to jail? That's my problem with that stuff. I don't like that. I don't like the big banks ripping people off. They screw people over every which way, and they get slapped on the wrist because really, who's paying that money? It's the shareholders that pay that money. Anyway, financial sector legging down a little bit today. XLP consumer staples. Basically, again, looking like financials, and I hate to say it, it's in a downtrend, but it broke above that trend and then it kind of sold off. So it's either retesting this trend line and looking for a bounce, or it's legitimately going to fade that that breakout and it's gonna trade lower. So we'll see tomorrow. XLU, or probably by the end of the week because there's so much news coming out this week. Utilities actually starting to catch a bit of a bid here, looking like a bit stronger, holding up a little bit at the end of the day, but closing with a doji, not really middle of the range, not really much to say there. Healthcare sector below that 21 moving average. We got divergence between the 50 and the 21. Everything gapped up. The whole market gapped up. And now it's just kind of in a holding pattern, waiting on news, everything except for the energy sector, which is selling, and that's kind of expected because really people aren't driving as much. More people are going. Um, there's still COVID going on, but more people are going back to work. The whole driving season just kind of got skipped over, and there's just more oil available than they know what to do with. So energy sector selling off, continuing that downtrend. Basic materials sector holding up with a gap just like the other sectors, and also utility sector, industrial sectors, basically same thing. Big thing about the industrial sector is it's above its resistance point. So it's back above that resistance point, and that's a good thing. So it'll probably continue higher. Okay, quickly, I'm trying to get through this video fast. Let's take a look at the new chart picks for the week ahead. So start off with MERC. This is the only short setup I've got here is MERC, and I'm not even 100% confident on it. It gave a really good candle today, a really nice close on that candle, and it has broken that uptrend and it's in that downtrend. Everything else is gapping up and this thing's actually selling lower. So I would expect that MERC should go lower, but I'm not 1,000% confident on this, okay? Let me zoom in on this a bit bigger. There we go. As such, I don't want to just get into it at this price. I just feel this would be too much risk. I would like to see MERC perhaps give a little push up, give us a little bit of a show that it's going to be sold off, because right now we have an 8 moving average coming down like that. You got 21 coming down like that, and you got a 50 that's working its way across and slowly working its way down. I want to see this hold and continue. There will be a retest. It's either going to happen maybe tomorrow or a couple days from now, but it will retest. And it either holds or it fails. My bet is it's going to fail. That's kind of the way I'm looking at that. So I'm looking at MERC for short. That's MRK ticker symbol. Next one is a long MDB. So MDB, I mean, this chart pattern's beautiful. It's just fantastic. I mean, it's bucking the trend of the indexes. It's been in this really long time holding pattern here. It just began building its uptrend. And I mean, what a great day this would have been to get in on it. Kind of missed it. High volume breakout. You got a high volume setup right here with a high volume breakout and two candle consolidation. It's holding long tails on the candles. It's holding on that 8 moving average. I might even have this box just a tiny bit too low, but this looks like it's setting up for a open up and perhaps something like, whoops, yeah, maybe something like this to the upside. So let's see if that pans out. That's kind of what I'm looking at for MDB right now. I'm thinking this is setting up really, really nicely. Great support underneath. You know, if I had the trend line on there, which I don't have the trend line on there, don't know why. It's on the other account, I guess. But if I had the trend line up there, there's just so many reasons for support on this thing. Even if it goes sideways for a couple more days, there's still going to probably be a pretty nice move on this. So I'm really liking this one. All right, let's take a look at our next chart pick. This is SPCE. This is Virgin Galactic. Now, looking at all the airlines, they're all kind of getting slaughtered. And Virgin Galactic had a gap. Not just a gap, but a gap on volume that was like almost 3 times higher than normal. And this isn't uncommon to see this thing happen. Big gap up, right? Big gap. And, you know, a big gap up over these trend lines, these moving averages, you know, in the past, it has pulled back and then continued to make an incredible rally. Now the pullback is usually just cash, you know, people profit taking and washing out of the trade because they're you know nervous what could happen next. And that's why I wouldn't be interested in buying it up here. You know, this is a loser's game to buy at the highs. You need to wait for pullbacks. You want to try and get in where you can manage your risk. And so on this particular setup, you know, a pullback, even a couple day pullback or a couple days of consolidation in here, something like this may not be all that bad because it would just bring us back into an area where we could potentially end up with something, you know, not exactly like that, but to give an idea, something like that. Because you got that 21, which is coming like this. You got that 8, which is going to end up like this probably at that point. And then you're above the 50. So you now got the 50 supporting price as well. So what we need is to have that pullback. That pullback, what it will lead to is giving us our trend line. Say that pullback comes here or something like that. That'll give us our trend line, and then that'll set the precedence for what's going to happen next. And as far as you know, how far can price go? I mean, there's major room here. There's a lot of space that price can move to. So I think the resistance was right there, and that's quite a distance. So looking at Virgin Galactic here, space SPCE as a long for later this week. Again, so much news coming out. It's going to affect everything, but I still think this one's, you know, it's not trending and correlating to the trend, so it should be different. Okay, next one, LVGO, Levango Healthcare. Um, Now, this is another one. I'm picking charts that are not, again, correlating with the indexes because if they're correlating with the indexes, we don't know what's going to end up. But this one here has been in a great uptrend, really, really nice uptrend, monster, monster uptrend. We're talking from 20 to 138 since March. Okay, so that's kind of an excessive uptrend. It's entered into a holding pattern, consolidation pattern, great consolidation pattern, and it poked out through the top, kind of held a bit. Did I buy this today? I think I might have bought this today. I'm not certain on this, but it poked out again and it kind of sold off a little bit at the end of the day. Wasn't happy about that, but that's okay. There's a lot of news coming out. And as long as it holds this trend line, I'm interested because if it over the time period of time it's been consolidating, if this thing ends up holding on this trend line, even if it gives a pullback, that should be a black candle, so right? Even if it gives a bit of a pullback, I'm okay with that because it could have a pretty significant move up with the amount of time it's been consolidating. So there will be some pullbacks obviously in between here, but I'm looking at this. If it fails below this trend line, you know, I would think it's unlikely because you got the 21 moving average right there, you got the 8 right there, and you got the 50 kind of holding place. Everything is supporting price right now. So we'll see what happens, but if it does, you know, fail below, I'll obviously get out. And this is where everybody needs to manage their own risk. So once again, folks, when I pull these things up, I'm putting these out there for what happened? educational purposes, but understand that everybody needs to have their own plans and how they're going to manage these types of trades if you decide to do these things. They're not recommendations in any way, but it doesn't mean that you can't take it on a simulated account. If you go to Thinkorswim, if you Google thinkorswim.com free paper account, you can actually download this platform, whether you're in Canada or the US. And they'll allow you to use this. I think it might be only 30 days if you use the one from the link in the United States. If you use the one from Canada, I think you can have the account for longer. But then you can practice, throw on one contract trades or throw on, 10 shares or 100 shares or whatever in a simulated environment where you're not risking real money, and really learn how to manage your trades, because it comes down to trade management. That's what makes the difference for the difference between whether you're successful or not successful. It's how do you manage the trades. It's not, the entry, whether I got in here on this particular trade, whether I got in here or I get in down here or I get in down here, it's not a big deal, because if it does what it's expected to do, which is go up to here and then beyond, then whether it's here, here, or here is not a big deal compared to where it's designed to go. Um, and so that comes down to the management really is the key. The entry and how I draw these boxes, I'm hoping that you're getting the hang of that. I'm kind of anticipating where price will go, and I'm not always right, obviously. I'm anticipating where price will go and try and get in at the lowest possible price to catch the move, to catch more of the move to the upside. Because by entering lower, you lessen the risk and you increase the reward. And I'm hoping that this is kind of sinking in a little bit. But I'll wrap this up. I'm kind of babbling on right now. I'm super ridiculous tired right now, just the way it is. I was in meetings all day, and then I'm going to be on a flight on Thursday, and then giving lectures on Friday, Saturday, and Sunday this week. So it's got a lot planned. But everybody, thank you so much for your support. Again, click the like button if you thought the video was good. And definitely share the videos. I mean, share them. Trying to grow the channel. I'm really shocked at how slow channels grow. I had no idea. So try and share the videos if you can. That would be greatly appreciated. And thank you again for your support. Everybody, stay green, be careful, and remember, cash is a position.